This is the Tapped In Podcast, the podcast for beverage distributors that want to empower their sales team to drive business results. Listen up and welcome back to another episode of the Tapped In Sales Podcast, your podcast for beer distributors by beer distributors. I'm your hostess with the mostest, Bud, here with Moneyball Ross and the Silver Fox George. I thought that Mike would join us today, and he may, who knows, he may pop in, but he is down in the Caribbean enjoying some.
He's working. He's
on his pirate ship. I mean, we work really hard at hardly working around here, Ross. Like, that's what we do around here.
We're kind of international now, you know?
International now. So he's down in the Caribbean having fun. I know that he is bummed to be missed. But you know what? We have the Silver Fox, one of the best replacements we could have in the game, to join us today. So, George, thanks for coming again along the ride for this episode.
Always great. Butter him up, bro. You told him to come.
I asked him to come.
His other duties as required.
And he was available. So.
That's right.
I love
illusion of free will.
It's something like that, yes. So a little bit of a news rundown this week, because we've had a couple back-to-back weeks of some topics, and people got to know Mikey a little bit last week. You know, where they're learning a little bit more about the making of Data Mike, which is great. I love the title. I'll take credit for that. That was no AI in that. That was all Bud. But we're doing a little bit of news, and we got to run down because there's a couple weeks worth of news for us. So first thing is prediction corner. I'm half right, half baked, half done on my father's side, depending on who you talk to. But Molson Coors buys Monaco, their first big step into the RTD space. For those of you avid listeners to the pod, you will remember, I'll play this for you and George here, but I'm going to drop in the actual clip. But you remember when we were doing prediction corner, here was my prediction.
Molson Coors get off their ass and they buy Carbliss. Talking about how they're going to buy something. They've been talking about how they're going to buy a piece of the puzzle or just anything at all. They've only bought a few things. They've been small, some whiskey drinks and everything else. They have the Molson Coors portfolio is incredibly weak in the high end and is incredibly weak in the RTD space as well.
So that was a prediction. Half baked, half right. I got it right in the RTD space, got it wrong in the brand, but there's still time. And as we listened to the BBD podcast this week, that whole crew was talking about, hey, they might not be done, right? So Monaco, what do we think about this? A different brand, different purchase. To me, I think Monaco vibes on like and I'm probably going to get tons of hate for this, but to me, it just connects to me on a different like value RTD space rather than like high end, like Cutwater or High Noon, where it's like the premium offering product. I could be wrong. That's just the vibe that I see on it from my side. So, Ross, George, what do you two think about this news?
Well, George, you're the newcomer. You go.
Well, I mean, I think it's clearly, you know, the key thing is everybody's got to be in that game, right? And I think everybody wants to have something that they can hold up as their premier or their leading entry into the space, right? And I think the space, we're going to continue to see that grow, just continuously, lots of momentum there, of course.
And I mean, they did signal that they were increasing their dividend and looking for strategic acquisitions after you made the prediction, Bud. So you thought you were about to cash in, and you did. I don't know what this does for the Carbliss side of it, though. This may be the shot.
So the Carbliss piece, I was thinking about this inside my head too, Ross, is that it's probably just hard for a publicly traded CEO to put a price on Carbliss. It's got so much growth trajectory ahead of it. It's growing in the market that it's in. It's got, half of the country it could still open. And if you're the owner of the Carbliss brand, the husband and wife team, like, how do you put a price on that? And if you're a publicly traded company, how do you try to put a price on it too? Monaco, much more established. It's in tons and tons of retail accounts. It's got good overlap. It's doing 3.5 million cases already. If you put a little bit more focus behind it as Molson Coors and you brought it under your banner, like, what could you quickly do with it? Over Carbliss is like, probably might be able to do more, but if you're wrong on a valuation standpoint, you might be wrong bigger than what you could be with Monaco. You don't get fired over buying Monaco, probably, is another way to say it.
Yeah, the devil's advocate on the other side of that would be, look at the tech industry. You buy the fastest growing, hottest horse, and you're going to miss a couple, but you want the unicorn. Google's acquisition of YouTube at the time looked like it was expensive, but
it was the best deal they probably ever have done.
But they've also done a bunch of shitty ones too. But they're going to overpay for what's hot and what's growing, and hopefully they get a unicorn.
Well, here's a good question for you, Ross, because we've both lived through the multitude of acquisitions of big breweries buying craft breweries, the independent channel on Molson Coors and the AB side. And in your background, you were actually working with many of these breweries that were getting purchased by Molson Coors and getting purchased by AB along the way, as in a former life and another product that you ran. So do you think there's any kind of, maybe two-part question, chapped asses still about how that game has ended up? Because it hasn't been great long term for them. And do you think this is more of when we're stepping into the RTD space and doing acquisitions, do you think those big breweries are going to be more cautious with their dollars than they were with the craft brewery game and the purchases they did there?
It's funny, you had the same thought as I did, but kind of a different angle. I think it proves my point about, buy the hottest, fastest growing thing. Now, if we rewind back to that era, what was AB buying? They were buying 10 Barrel, Elysian, Devil's Backbone.
The rest of CBA. They technically did the rest of CBA, but I wouldn't really count them in that. And then they did Mango Cart, who is Golden Road.
Golden Road, and then there's the guys that were experimental in the Southeast Nashville. I'm drawing a blank. Wicked Weed. Now, what did MC come in and buy behind that as kind of a secondary move to follow? They bought Hop Valley, Terrapin, Revolver. I would argue that the better play is to buy the faster, hotter horse. Now, I don't think anybody saw how badly craft has kind of peaked and collapsed. The peak of the market was the Ballast Point deal at $1 billion, right? That was the top of the market. It was literally to the day. Like, if you can map the peak, it is that day. Poor Constellation. Was Constellation? Was it Constellation? It was Constellation, right?
Who did buy that?
And then they ended up selling it to like Kings and Convicts or something for like pennies on the dollar.
Yes, it was Constellation. Yep.
Oh, that was
a massive breakdown.
But as we look at the environment today, who's still around and who still has market presence, right? 10 Barrel's still around in the Northwest. Elysian's nationwide. Golden Road's still nationwide. I think Devil's Backbone still has a presence in the Southeast. Wicked Weed still has a lot of credibility. But then look at MC's portfolio, right, and compare the two. I don't want to disparage those breweries because, again, every one of these people were clients of mine at one point, right? Revolver was a client. Terrapin was a client. Hop Valley, 10 Barrel, Elysian. These are all great people, great brewers,
good operators too. Like you work with these folks; they're good at what they do.
Absolutely. But I think, and again, like I love the Hop Valley guys. I think they were, and that was probably their best. Well, I love them all. I'm trying to get myself in trouble here.
This is like a child, right? You love your children equally in different ways, Ross. We don't rank them except publicly here on the podcast on which one of the girls you like most.
Yes. I feel like you should edit this out. I'm going to get myself in a lot of trouble here.
No, you're doing great.
My point is that the brands that are still strong and have grown to national presence are the ones that AB bet on and probably overpaid for, right? Now, I think all of it's probably overpaid for based on the way the market's gone. But if it would have continued on that trajectory, I think those would have been the primary horses.
But you gotta keep in mind too, at that point in time, that space was hot, right? So right now RTDs are hot, and Molson Coors needed to expand their portfolio and beyond beer. Um, but as you characterized it, right there, they've got room to grow the brand. Um, it in terms of that space, right? It's much higher margin that you can get for those products. So the dynamics there, I think, are all aligned for them to do with the potential to do great things with it, right?
Mm-hmm.
And I don't know the details of the deal, but this could be like one of a couple of acquisitions in that space too, right? To help them really build out that beyond beer space for themselves, right? So they didn't maybe want to go and get the premier horse; they might have wanted to go get a couple, right? So that they had broader expansion in the portfolio in that space.
Yeah, I mean, what you're laying out, George, is more of a block and tackle strategy, which is block the market out. Take both the horses and block out, and snuff out any future competition. And a duopoly with AB that it can be a great strategy. We'll see. I mean, if they were just bargain hunting and they chose the cheaper option relative to valuation, price to earning growth ratio, I would say price to earning growth ratio may have been skewed towards Carbliss, but I think you're right. But I think Carbliss would have been expensive to digest, especially with its existing revenue. So I'm not saying that Monaco's less than. I'm just saying that, to your point, I think you tapped into it, which is from a valuation perspective, it was probably less expensive.
I just don't know how you do a discounted cash flow analysis as a publicly traded entity and look at and marry and right size that with two founder owners, operators who are profitable, who are, by all public accounts, run a great business. It does everything you need to do from a distributor standpoint. When we see the sales, it accomplishes a ton of great product and a ton of great results from the sales standpoint on our clients that work with it. I just don't know how you square what they want with what a publicly traded company and the guardrails that they might be willing to work within on a valuation based on a DCF. Like I just don't know how you marry the two, which is probably why I'm less than half baked and give myself more like a C- grade on the prediction. But there's still time. We'll see. We still got a long time.
I think for the listeners, you need to explain what a DCF is.
Discounted cash flow analysis, where Ross can do a better explanation of me, but you look out a forward-looking projection of the earnings, and then you discount that off, and like, how much do I value it at? How much might be willing to pay the owner of the asset today for them to walk away because they're giving up future projected earnings, and I need to pay for it with those projected earnings in some way, so I discount them off. Kind of like my shorthand way of explaining it, Ross.
Yeah, I mean, it's pulling everything in the future to today, and a bird in the hand is worth two in the bush. Mm-hmm. So the question is, what is the ratio between birds in the bush versus birds in hand? And that's the discount rate. So, yeah.
So good story. Like, it's also, Ross, too, we've been talking a lot for the listeners out there about how good of a position distributors are in, because if you are a distributor out there that has one or three or four or a handful of these brands that you're working with, like, you have lots of optionality in that. You can spread your risk, and you have brand owners that are bringing you innovations that are all trying to vie for the same results and same outcomes. If you're Molson Coors, this purchase is very important. It's imperative for you to make a purchase like this and move into this direction, because you have nothing in this growing market and in this growing space. Not necessarily like it's news for us as distributors where we live, but it's not necessarily like going to change the outcomes unless you're an AB with no franchise protection on RTD spirits or spirit state. You're going to lose the brand relatively quickly. Like, that's the outcome of this, is what's going to happen for you as a distributor. If you're franchise protected, you're going to negotiate it or you're going to keep it. One of those two things are going to happen. This moves into kind of like running through from some trade press news around 2025 and some of the categories of sales too. Another kind of like, just wanted to touch on this before we pivot into like talking about March and April sales and what you're seeing, Ross, because we usually talk about you and Mike. But you can see that above premium was down 4.5% for all of 2025. Mainstream was down 6.3%. But again, to layer into that, non-alc beer is up 22.5%. And I thought this was going to have, there it is, the FMB seltzer, but this is probably malt, was down 8.1. But like that RTD world is just growing so quickly that leads right in to the next question, Ross, which was really centered around like how our sales looking on the ground for March and moving into April from a goal setting standpoint. Like, what's the pulse from your brain to the listeners' ears on what's going on in the market right now?
We talked to a lot of distributors, and from a volume perspective, a lot of the volume. I would say that volumes have improved. Structurally, especially in our client base, the profitability continues to move up. I wouldn't say that's uniform. I would say that, it varies from our newest clients coming on board, close to flat, to some of our, rocket ships moving up at 40, 50 cents a case-ish. But I would say overall the direction is positive from a GP per case perspective. And GP overall dollars now pushing positive. I tend to think that, alcohol consumption can be a leading indicator, but I think we have yet to see kind of the digestion of what's happened over the last 30 days kind of play through the market. And I think that includes our market, right? How long this conflict is going to go on will dictate oil prices. And that has a big impact on the movement of heavy ass liquid around. So it is going to impact our industry, and it's going to impact overall demand. I think going back to the predictions piece, I was talking about a melt up, and the concern here is that this is, significantly inflationary in the short term, which has paralyzed the Fed. So, I could still be right, but this is an interesting turn of events that I don't think any of us had on our bingo card, and it's going to affect everybody. And the market's signaling short-term inflation, long-term recession. And I don't think anybody saw that coming.
Well, what's interesting about this is I talked to somebody else in the world of like, how does this play out or impact, the industry? And I said, because this was early days in the conflict in Iran, and it was like, everybody loses their mind when gas hits $4 a gallon. And boy, did it take no time to get to $4 a gallon. And what did it take? 2.5, 3 weeks to get there? Yep. Diesel jumped $1 overnight almost. Like in a week, diesel was up. So that's negatively impacting to owner operators of beer distributors, anybody who's shipping anything. You're talking about shipping rates. You're talking about USPS adding a surcharge to packages. I don't know if they've ever done a surcharge before. I had never seen that before. Not a surcharge to regular mail, but a surcharge to packages as well, fuel surcharge for packages. And it's just moving so quickly. And it's just going to be interesting to see how that plays out with the dynamics of, is it really impactful? Because we are using less gas and we're traveling less than as Americans than we ever have before. But that doesn't mean that we're not impacted by the $4 a gallon. And even Sarah, we were talking, she drove up to Gainesville today and is driving back. And she's like, it's $60 to fill up the Explorer. And I'm like, yeah, I know, it's $4 or $4.05 a gallon or whatever it is around here.
I think what's more damning is it affects the entire supply chain, though. It's using plastics. We got to ship half this crap across the ocean to get here. I don't think people fully appreciate cutting off 30% of the supply of the oil of the world, and letting it sit out there for 30 days. Even if the thing opens, if the strait opens tomorrow, or by the time this podcast comes out, which there was some good news today potentially on it, but even if it opens, the disruption's in play. And the best analogy you can come up with is, from a supply chain perspective, is going to be something like COVID. Like that's the kind of impulse we're seeing here.
Well, and I think that the uncertainty, right, is everyone's taking action, right? To your point, Bud, earlier about, suppliers and throughout the supply chain, right? One major airline today knocked up their baggage, $8 a bag to, check.
Who did that?
Delta
bumped it from what, $20 to $28?
I don't know the details.
Or whatever it was.
$8, increased at $8 a bag.
Careful what you say about Delta. By the way, where's the polo?
Hey, that's why I said one major airline.
I got the credit card. It's $35 a bag now.
So again, I think it's just that uncertainty, right? You could say, is it opportunistic? But I think, as these business leaders look back to previously what's happened with gasoline or with COVID or with world events, right? They're like, do I hedge my bets early on? Do I protect myself? Um, the sad reality of it is once those prices go up, they go up a whole lot faster than they ever come back down, right?
Mm-hmm.
And I think that's the real long term, the uncertainty of the length of these events, but then once to your point, Ross, too, is it's like, okay, if it ended tomorrow, you still got all those ships that got to still come across and through. So it's, we're months out, even if it ended, pretty quickly.
I mean, if you look at poly market and you look at, the pundits, people are tossing around the R word a lot more now, right? Recession is getting talked about. And I think poly market's pricing it in more and more and more. So, and then the long rates, I mean, there's like a kink in the curve in terms of the bond yields, which basically signals that long-term bond holders expect inflation to be lower in the future, which usually indicates recession. So I think what's important for our industry is there's a couple things here. One is impulses. I mean, inflation hits us hard from a fuel perspective, right? We move very heavy liquid around, and we move around a lot. So fuel impacts us pretty heavily. From a supply chain perspective, a lot of it comes in from abroad, whether it be aluminum and then raw materials. So that's impactful. And then the final piece is recession. The good news there is our industry tends to be a little bit more insulated from that. As people get laid off, they get depressed, they drink. I'm not saying it's a good thing, but they tend to drink, especially as AI continues to disrupt and drive layoffs. We could be in a position where the Fed's caught between the job market and inflation then turning into deflation.
Ross, when you think about the bullwhip effect, is a good way to describe it too, is that all of these ships are stuck in the strait and not be able to pass. And that's how long it's going to take for them to digest that time. And that strait is only 6 miles wide, like the narrowest part of the shipping lane, 2 miles out, 2 miles in, 2 mile buffer in between for the ships. And you can't have them all go out at the same time or all come back in at the same time. But that buffer is going to be there, or that's the challenge at the end of the day of what that's going to be.
Again, I think people aren't fully thinking about this. I mean, not only are those ships backed up, but all the producers have had to hold. They don't have storage capacity for 30 days. So they've all had to pull back production.
Force
majeure. Yeah. And
they don't have warehousing.
Right. And worse than that, a lot of them have been hit by drones. And I think Qatar said, they lost 30% of their capacity and it's going to take years to recover. Well, shit, Europe turned off all their gas pipelines to Russia and they went to LNG from Qatar. So what the hell are they going to do? I mean, the U.S. created a worldwide problem here, and it's worse. I mean, we're lucky; we have domestic production of oil. I mean, if you're in Australia, if you're in the Southeast Asia, you're screwed.
Well, don't we produce and use we're about on balance right now with our crude oil consumption, right? We're about 20 million a day bring in and use, and we can create about 20 million barrels a day.
Yeah, I mean, we do import, and people look at that weirdly, but it's because of refineries and what our refineries' capacity is and what type of oil they can consume. So we do export and we do import, and then because the mismatch of refining capacity type across the planet. Yep. But yes, we're net even at the point.
On balance, we're balanced out.
It goes back and forth, but we're pretty damn close.
Yeah. That's the nature of all of the electric vehicles, the less travel for commutes, and the number of people that do not go to the office as much as they have, and a handful of other things. But, it's interesting. This leads into that BPI, so Beer Purchasers Index of a forward-leading indicator where you've got beer purchasers out there. It's from MBWA. Lester Jones was able to share with us. We're going to have him back on the pod in a few weeks, was able to share with us the March results, which is great. Everything in the BPI above a 50 index is growth, below a 50 index is declining. March BPI is a total, hitting 50 is a real improvement, so expansion, which is great. Also, a couple of these things that are like recession indicators or leading indicators, every single indicator from total, imports, craft, premium lights across the board, BPI improved March 2026 to March 2025. But a couple call outs that I think are really interesting here. This is the BPI on a bar chart, right, versus last year, Ross. So we can see where everything, is this the right one? This is the one, where everything is improved, which is great for year over year results. If we go down a couple more, we can actually see to this recession idea, premium value below premium. Look at that. If we're thinking about recession, Ross, if we're thinking about performance of brands, this has been on a consistent trajectory, maybe recently a little bit showing weakness, but then jump right back above the average line right here. So leading indicator, consumption patterns, brand performance is right into this wheelhouse as well too. And this dovetails into what we talked about a couple episodes ago, where you got Michelob Ultra and Modelo of the top 10 or 15 brands. Michelob Ultra and Modelo both doing well, and Busch Light. Those are the three real growing brands in the top 12. Every other brand is declining currently in current, kind of like RTD or real world, real time, not RTD, real time. So any feedback on your guys', Ross, where this lands with you, where, it lines up with what we're seeing for the most part in the field as well too, I think.
Yeah, I mean, I think that lines up with the qualitative, data that we have in terms of our client base, and what we're seeing for March. I mean, again, it's a whole new animal now that the world changed. So
yeah. Are you seeing the people planning April a little bit differently at all yet? Nope. Just watching it play out.
I mean, this is the first time I've had any conversation with anybody from a business perspective about the fact that this thing's even happened. I mean, it's baffling to me that, it's a non-subject. I mean, I don't know what that says about us as Americans, that, we start wars and we don't even bother to talk about it anymore.
Our niece last week
at war.
Our niece last week was like, we kidnapped the president of Venezuela. I'm like, who told you that? And he's like, well, my mom and dad did. I'm like, well, yeah, I guess we did kidnap them. I just thought her word and verbiage was hilarious. She's 11 years old. It's not wrong. She's not wrong. That is very true.
Team America, World Police, baby.
Yep. George, as you talk to clients and you talk to, people in the industry too, anything, from where sentiment, how you're hearing from folks as well too. I think this is something that we kind of share a little bit differently from just because of how close we are to clients and how close we are to the industry and hearing what's going on in the ground.
Yeah. Kind of to Ross's point a bit is that right now, I mean, while people make comments on it, it doesn't seem to be like batten down the hatches, right? And I think that, I do always admire the spirit of the industry, right? We're looking for things to celebrate and not like ignoring other, activities that are going on, especially such as these. But I just think that there's still a big build. There's still the momentum coming out of, the Olympics and the Super Bowl, and people are looking forward to the summer, with the World Cup and 250th anniversary of the country, and whether the other, typical summer events, Tour de France, whatever that might be. So, I think that while people are not ignoring what's happening, I think sometimes you've got to keep that positive perspective to look for the opportunities to celebrate and to if you bind yourself with doom and gloom, right, you're going to fall victim to the downward spiral. You're going to create it, whether it creates itself or not. And so I think that they're trying. Again, what I admire about the industry is they always look for and sometimes even offset, right, the negatives, and looking for those moments to celebrate. So, in a word though, I mean, I haven't seen anybody saying it's time to slow down, right? We're going to take this under advisement. We're going to watch it, but until we think we need to otherwise, we're going to focus on the positives and the opportunities.
Yeah, I mean, the concern or the fear would be that, it's similar to, again, I think I'm seeing the same thing you are with our customers. I mean, you're further up the pipeline too. I mean, you're seeing how people are making longer term, big decisions around purchases of software. And I think you're seeing the same thing that I'm seeing at the sales to retail level, which is there's nothing to worry about until there's something to worry about. Oh. And, the concern is that you end up with a situation similar to COVID where everybody was like, well, that's interesting what's happening over there in Wuhan. And it's really interesting that the planes are leaving Wuhan and landing in Seattle. Kind of cool. And then one weekend, everybody woke up and was like, oh shit, we got a problem. And then the same thing with the 07, 08, you had, Bernanke come out there and be like, hey, subprime's contained. Nothing to worry about here, guys. And then, same thing with private credit. They got funds that are closing the doors and saying you can't redeem. And you've got everybody saying, well, that's not a big deal. It's a small part of the market. Okay. So is subprime. And then the other piece of it is you've got an inflationary shock and supply chain shock happening that I think people are underestimating how long the impact's going to be, especially as we head into the summer driving season. Everything George talked about requires a shit ton of oil. People flying all over the ass world, people going to World Cup, all the events around World Cup. I mean, the United States burns a shit ton of oil during the summer as everybody travels, and so does Europe, and so does because if you look at the world, the vast majority of the population economic activity happens in the Northern Hemisphere, and our summer is coming.
Be like what that looks like, because there are a lot of tailwinds to George's point and a lot of opportunities. If you don't have anything or you don't have the work or the oil to get people here, like do flights get canceled? Do people slow down? I'm trying to book flight to Europe right now as well, trying to be cautious about when I do and how much I spend on it, just because I know that prices are going to go up, but we're still a ways away from our trip too. And, it's just who knows, man. Who knows what's going to happen comes September, October, if we don't get this fixed or don't get this resolved relatively quickly. It's going to be fun. It's going to be fun to watch it play out one way or another. At the end of the day, the industry has got a lot of tailwinds still and a lot of opportunities. And this might just turn into a headwind. We'll know. I mean, at the end of the day, Ross, right? It is a lot like COVID. You're going to know more as it evolves, how you change and shift with it. If you've got your brands in the right place, if you got execution, if you're moving in the right direction, like you're going to be as much organized and as much in control as you can. After that, you gotta see where the chips fall and see what happens.
It's the old Chinese proverb. We'll see.
Right? We'll see.
And exactly with COVID. I mean, everybody freaked out. On-premise shut down. Alcohol consumption went up. You just had to pivot, and product mix shifted. If we go into an 07, 08 type financial crisis, great. Guess what? You're in the alcohol space. People are still going to drink, and you just got to follow the mix and follow the customer. You can't say the same for most industries. So we'll see. I mean, it could be great.
An affordability crisis is, I was talking to Sarah about this, affordability crisis is a lack of value wrapped in a nice marketing package for, mainstream media and everything else. To me, folks are just saying that they're looking for value. Like, what can I get out of my dollar and how do I get the most out of it? Whatever that looks like to them is going to eye of the beholder, right? And beer, on balance, is a cheap luxury. There isn't a lot of expense around the luxury. You have, like you've said on the podcast many times, Ross, you have some of the best beer in the world for $10, $12 a six pack, right? Like, not a lot of money. You have to spend hundreds of dollars on some of the best tequila in the world, hundreds of dollars on some of the best wine in the world. And for some of the best beer, it's like $12, $10, whatever. And you're going to get a lot out of that. And that might be something that really helps beer in the short term, is if it gets a little bit tougher, because you can get a lot out of a bottle of beer really quickly.
Yeah, and if you're sitting in your backyard and all you have to do is mow the yard because you can't go on that vacation, you may drink more because you're spending less time traveling and moving around. You have nothing to do but drink and mow the lawn.
Look, I'm drinking mow the lawn out in Oregon with you.
Hey, the bottom line is that our clients are still going to have to move the beer. They might move a little more, they might move a little less, but it's really about having a plan and an action plan in place, right? And to your point is that you'll adjust as you go, right? So if whatever direction it heads, is if you've got a plan. I mean, again, we keep referring back to COVID, but I think as an industry, we did a very good job in terms of dealing with whatever the dynamics were, right? On-premise shutdown, we figured something else out, right? Collectively as an industry. And I think also that kind of hardened people to say to a level that we're not going to ever let that happen again, right? And so we're not going to be put into a box. We're going to be more social. And the beauty of coming into the warmer weather too in North America is that creates more of those social events. So not losing sight again of all the world's activities, but maybe being too much of an optimist, but it's just, how do you make the best of the situation, right? And so as beer distributors, again, if you have yes, we sell technology, and if that technology enables you to be more efficient or more effective on the way that you execute, right, then you're going to be able to dial it up or dial it back as you need to, right? Or dial it across the different brands and respond to it.
It was a wild time to be alive to sell beer in COVID. This hopefully doesn't look that chaotic or that crazy. But if you can live and run any business successfully through COVID, you can manage this as well too. So that's right. The good thing, because that was a wild time. Absolutely bizarro world time to run a business for sure. And us at Atlas, when we lived through it, it was like, okay, I guess we're not going to go to the office anymore. And then it was like, nope, we're going back to the office because we can't stand being at home and we're going to break the rules, which is right on brand.
I don't know the statute of limitation on that. Gretchen Whitmer might come for you.
I'm not a Michigander anymore. I'm not there. So she can come find me down in Florida and then go from there. Just a wild time to be alive. We should relive some of our favorite COVID stories with reps or with people in the market or with clients along the way somewhere in another, 6 or 7 years when it's not so fresh. They got a 10-year reunion on COVID or something like that.
Anniversary episode.
Anniversary episode, yes, of me telling Kenny, we're not the police. If the bar wants beer, send them the beer. We're not the judge and jury on this. Oh, well, who's he selling it to, bud? I don't know, Kenny. It's not our job to police these guys. That's somebody else's job. See, if he wants the beer, sell him fucking kegs. We need to get rid of them. So get rid of them. Oh, I love it. Well, boys, thanks for joining us on another episode of the Tapped In Sales Podcast. If you like what we're doing, listen, subscribe, share with a friend. If you got questions, things you want us to touch on, anything about the business, nothing's off limit, send it our way. We can touch on it on a future episode. Silver Fox, thanks for joining us again. Moneyball Ross, you rock as usual. I love the economic picture you always bring to the table around the podcast and elevate that side of the coin. So you boys rock. Love you guys, and we will chat soon. Cheers.
Cheers.